Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Friday the 6th of July 2018. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @DS_Pepperstone. Right, let's take a look at the overnight changes and price moves to be aware of. And a pretty quiet session, I have to say, overnight. Very few points of interest. The one thing that does stand out, however, is the pushback, the strength, if you will, in the New Zealand dollar against its US counterpart. The Kiwi adding 0.4% against the US currency overnight to trade at 0.68099 shortly before we recorded the video. I'm struggling to find a definitive reason for that strength. Of course, the Kiwi had been under pressure of late, so it had a downward run, and perhaps we're seeing some position squaring ahead of the important US numbers later and the end of the trading week. Very little else, though, of comment or note to talk about here. Right then, let's move on to what's on the calendar, events that may move the markets today. A pretty compact calendar, but as ever, there's enough to get our teeth into. We've already had leading economic index data for May out of Japan, coming slightly ahead of data at a forecast rather, at 106.9 versus the forecast of 106.5. And then to come at 6 a.m. GMT, we'll have industrial production data out of May on a year-on-year basis, that number. And then we fast forward to 12:30 and the main event, the US unemployment situation report, including non-farm payrolls with forecasts for 195,000 new jobs created. We'll also have average hourly earnings, unemployment, labour force participation data as well. Accompanying the non-farm payrolls numbers, US trade balance data for May, and obviously very topical at the moment. We'll see similar data out of Canada at 12:30 alongside their own unemployment rate data as well. And of course that's important this week as we head into a Bank of Canada interest rate meeting in the week ahead. At 1400, some more data out of Canada that may shed light on what the Bank of Canada will do next week. The Ivy Purchasing Managers Index data for June. And then to round the day off at 1700, the ever influential Baker Hughes US oil rig count. Right then, breaking news and comment that's caught my eye overnight. First of all, the US has imposed tariffs on $34 billion worth of Chinese imports from today as the trade war heats up, turning from a war of words into a war of action. The Fed minutes reveal, however, that some of the FOMC members and some US businesses are concerned, or growing increasingly concerned, I should say, about the effects of trade protectionism on the US economy. And flying back around the world to Australia, Australian construction PMI has fallen to 50.6 in June, data reveals. This is its third straight drop. More worryingly, perhaps, new orders contracted, as did the construction employment elements of that data. So further worrying signs there for the Reserve Bank of Australia, and that's the kind of data that may keep them on hold as they consider what to do about interest rates. Right then, food for thought, something for you to take away with you and think about in the trading day and beyond. And why not think about this? Emerging markets have been under pressure in 2018, dragged down by a strong dollar, rising US interest rates, and the impending end of ECB QE, as well as trade concerns that we've already mentioned. Recent research from Goldman Sachs shows that year to date we have seen the third largest outflows of cash from emerging markets since 2002. So we talked about money leaving the emerging markets, but now there's clear evidence that it has. The charts here show cumulative flows into emerging markets since December 2016. You can see how they've fared over recent times, and that plots that against the MSCI Emerging Markets Asia Index, and the table here is the data that shows the flows into and more latterly out of some key emerging markets in Asia. Right, please take a moment to read the risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account representative. Thank you for your time.